Hi, this is Terica Talbert with Century 21 Blackwell and Company. This is where we're going to share information on general real estate, financing, home improvements, and also empower you with inspirational information that will help you throughout your week. Stay tuned. I think it's going to be a blessing to you. Hi, I'm Terica Talbert, and welcome to my YouTube video today. I would like to just share with you, for those of you who don't know, I am a real estate agent here in Greenville with Century 21 Blackwell and Company. And I wanted to be able to share some information that I thought would be helpful to you, our viewers. I have Joseph Barker here with us with Best Life Mortgage. How are you today, Joseph?
I'm doing wonderful. Thanks so much, and thanks for having me here today.
Well, it is a pleasure to have you here with us. So what we were trying to do is, on this YouTube video, I always try to give helpful information to you, our viewers, but I also would like to bring inspiration and encouragement to help you as you're moving forward in life. So as we begin to share, if there's any questions that you might have that we have not covered in our YouTube video today, we'll give you the information for you to actually be able to call in for additional information. So Joseph, we are in a crazy market right now, like crazy.
Yeah.
Nobody has seen this before.
I can say that again.
So I know that I'm older than you, so I know you haven't seen it before. But,
well, you look younger, right? So.
well, thank you so much. But we are here in some challenging times, and we are trying to be able to give information to our viewers who may be that first-time home buyer, or possibly even a homeowner that wants to sell at some point. You know, we know that they're going to be able to make hopefully good money during this time quickly, but then what do they do after that? So if you would, share with our viewers, what do you need for them to do in preparation before they get to you?
Yeah, so it's a very important question, and some people come very prepared already, yes,
Okay.
and some people don't. And it helps.
Would you say 50, what, 40, 60?
Yeah, right around there.
Okay.
40 come prepared, 60 don't.
Okay.
Yes, and so it definitely alleviates stress for you as the person who's going to be purchasing your place. When you come with the preparedness of having your documentation ready. And some of those things are going to be income from your employer, so whatever that might be, you might be an employee, so you're getting a W-2. Right, and so taxes, tax forms, and you need usually 2 years worth of those tax forms. Okay. You're also going to have your driver's license, of course, ready. Get that in a picture.
They need to know who you are.
Yes, you know who you are, that you're a citizen. And there's also, you don't have to be a citizen to purchase homes, though.
Okay.
Yes, yeah.
Okay.
So, yep, you can have green cards and different things like that.
Okay.
Right, and so you just pass that in. Don't worry about it. If you don't have a driver's license, you can have a state ID as well.
Okay,
yes.
Good information.
Yep, yep. So you want to have those things ready. And if you have them ready, we're going to request those things. And the sooner you have that ready, the faster we can get you pre-approval for the house that you want to go and get. And that's very important in this time of market, because the sooner and faster you get out there with your pre-approval and your offer letter for that house, the faster you're going to get the house you want.
Absolutely.
Yeah.
You know, there's back in the day, it used to be where people would want to just go and leisurely look at properties. That's not the market now. It's not the market. No more leisure. You actually have to be prepared financially. I need to know that you're prepared financially before we're going out to just randomly look at properties, because you need to have your pre-approval letter, because there's going to be one house that you're going to want to move on, and you're not going to be able to if you don't have a pre-qualification letter. So being pre-approved and being pre-qualified, is it the same or is there a slight difference?
It's quite a big difference, actually. Yeah. So being pre-qualified is you're just had a conversation like we're doing today. I might ask you some questions about your income, how long you've been at your job, things like that. And I can tell you, okay, now maybe you'll be approved for this amount off our conversation, but we haven't taken it to underwriting, and they haven't given us the approval or pass saying
Can
you
you
are.
tell them what underwriting is?
Yeah, so underwriting process, they're going to look through all the documentation that you put through. So that's your taxes, your income, your driver's license, everything that you would hand in to us. And they're going to, there's requirements for different loan programs. And they're going to be able to underwrite that, meaning they're going to check, making sure that you are going to meet the requirements for the loan program that you want to get.
They're the department that goes through everything with the fine-tooth comb to make sure that you are actually in a financial position to actually be able to purchase the property.
Correct.
I tell my buyers that this is the last point of where you will hear yes or no.
That is, yes, yes. And we do get things back from the underwriter sometimes, and we have to, sometimes we talk to them and say, we're on your side with this, right? We're not on the side of the underwriters. We're on your side as the buyer. We want to make sure that we get everything correct. And sometimes they say things to us that's not correct back, and we just have to say, okay, well, actually, this is what we were meaning.
So you have to clarify for
Yes,
them as well.
sometimes.
Okay,
Yeah.
I understand. So one of the reasons why I thought it would be very interesting for Joseph to share some information with you guys is because we want to be able to share with you. I have a lot of buyers that say, well, I'm just going to wait till the market changes. Yeah, I think I'm going to wait till the first of the year. So I wanted Joseph to be able to come and to share some pros and cons of both waiting and moving forward. So if you don't mind sharing some information with our viewers.
Definitely, yes. And I've had much experience with this past over a few years here. I have friends myself who just a year and a half ago said, Joe, I think I'm going to wait and just to see if the market comes down a little bit, corrects or crashes or whatnot. And, these are the things that are out there on the media, and you hear all the time that people are talking about over dinner, right?
Right.
And so it comes up. And now they've called me and asked me, well, what's the market up to, right? They're shopping around, but now they've figured out they can't afford the same neighborhood.
Wow.
Yeah, they can't afford the same school district they wanted to get in. And so now they have a decision, do they keep on renting exactly where they were or go to a less desirable place that they might not want to be in, right? So there's a catch-22 a little bit where you move, and sometimes that move is the right move, right? Because no one has a crystal ball of what's going to happen next, right? And so, but if you make that decision to move forward, usually in this market over the years, decades, if you purchase sooner, you're further ahead. It's just how it is. It's how it's been. And so if we can talk about some numbers, and I have some numbers here.
We're sharing some information.
Yeah. And so let's take a look here real quick and see what we got. So actually, this is mine just recently. So I'll share this one really quick first. Okay, this is my house. I locked in my rate on March of 2021. And this was a new build. And then I actually was able to lock my rate in on this new build in September of 2021, okay? But I had this house at $276,000 back in March of 2021. And my rate I locked in middle of September, was 3.1%.
Which was still a very good rate.
Yes, I actually was quoted 2.5% through that year.
Wow.
Yes, so it's one of the lowest rates I've ever been quoted for a mortgage. And so, but I wasn't able to lock it in at that time.
Because of the build.
Because of the build. The new build wasn't complete yet. But I did lock it in at 3.1, which is great. That's the lowest I've ever got it. And so we now been in our house for about 6 months. So I wanted to see what's my house worth now? What if I were to purchase it exactly today? So I did that as well. So now my house is worth $317,000 on the market, which is 41% increase. $41,000 worth of appreciation. So that's a 15%. Now South Carolina has a 17% appreciation over last year. Yeah, so it's pretty big. Now the rate, which is mind-boggling to me when I looked at this, it's 5.27%, the rate that I was receiving on the exact same program that I was getting. That's 2%. That's over 2%. 2.175% difference.
For me to recap, the price that he purchased his house 6 months ago has increased $42,000, and the interest rate that he was quoted 6 months ago at 3.1 is now 5.25%. So that is a 2% increase over what he was originally quoted and received 6 months ago. So for those of you who are on the fence of should I wait or should I move forward now, the numbers are not lying. You may be able to get a lesser home now, but you will be able to, it'll be able to be a benefit to you in the next year or so.
Yes.
Because again, we can't tell you what the market is going to be. Even if you're purchasing a house now that is at a good sales price, and you decided not to stay within the next 5 years, if you're not having to go so far over list price, you will still be able to financially benefit from your investment should you have to sell. Now, what do you think are your ideas or thoughts about going over list price? How do you feel about that?
Yeah, so
How
sometimes
does that play for you, I guess I should say? What does that mean to you as a lender?
Yeah, so if a borrower wants to offer more than the house is being listed for, that's your question, correct? Yes. So sometimes you have to do that. Multiple offers. Today, it's a crazy market where there's multiple offers on almost every single house, and sometimes.
Absolutely.
Yeah, and it was like that before too, but today it's kind of pretty extreme in some cases, in some places. And so to win the house that you love and that you really want, sometimes you have to offer over asking price. Now, there's also other things that you can do too, not just offering more money. Right? And if we could go over those a couple, but just asking over price for the listing, don't go crazy.
Yes.
Right?
Stay within your means.
Yes, don't go crazy because you don't want to get a house that you can't afford. Right? You might be able to afford it from the bank, right? But maybe you can't afford it with your own finances, and you know your own finances the best out of everyone else, and what you really want to stay in, your comfort zone. Right. So offer, you don't actually see the other offers, and so this is tricky. But talk to your real estate agent. Pick their brains about it, see what they think, and then decide what you want to do with that. So, but I think it is a good idea if you really love the house, but don't go crazy, right? Maybe it's $5,000, $10,000 more, or something like that, or whatever it is for that area that you're trying to get into.
So we are here to help navigate you through the process. The ultimate decision is yours, but none of us want you to be house poor. And with the debt-to-income ratio, there's a certain amount of wiggle room that you have anyway. Can you share a little bit on that?
Yeah, so a debt-to-income ratio, typically banks can actually offer you up to like 56% of your income that you've earned. So you can spend up to 56% of your income on your house and other debts that you have. But there's something called a front-end debt-to-income, which is just your mortgage payment. And there's the back end, which is your mortgage and then your debts as well together, like cars and credit cards and student loans and things like that. And so if you're going to stay, me personally, I'm more conservative in what I like to be able to spend.
Because you want to be able to take your wife out to dinner every now and again.
And I got 3 kids. And they take a lot of my money, which I love. So I love my kids and my wife, and I wouldn't have any other way. But what you want to make sure you do is the house that you're going to have on the front end, typically you don't want to go over maybe like 35% of your income. And I know some books will say 25% or whatnot, like Dave Ramsey and people like that. But, in a housing market like this, 35% probably is pretty comfortable for most people. But at the back end, 45% is where a lot of people get into. 45% of their income is what they'll spend on their home and their debts. And then everything else goes to all their other bills, right? Their food and cars and all that stuff, right? Yeah.
So we're trying to make it comfortable for any buyer that is looking or attempting to make a purchase during this hour. We want you to know that we are here to help and support you, to navigate you through the process. Again, it is your decision, but we want to make sure that you have all of the upfront information to make an informed decision for you and your family. Is there any other information that you have, Joseph, that you would like to share with our viewers before we wrap up?
For sure, yeah. So actually, and just on the same of listing, asking more than listing price, right now there's actually 36% of homes are offered more than listing price in South Carolina. And about 7.8% actually reduced in price.
Really?
So not a lot.
Not a lot at all.
Yeah, but 36%. So there's quite a few homes out there that are going to be, you have to offer more than this price to get if you want to win it. The average cost of a home right now in South Carolina is $323,300.
So what do we do with the people who are in the 150 to 250 range?
Yeah, so this is average, of course. So there's going to be houses still and condos and other places like that. That will be a lower end of that price range. And of course, there's much higher houses, right, in South Carolina and closer to the shore, of course. But this is average. But yes, you definitely want to speak to your agent, real estate agent, and say, hey, this is where we want to be, and see if that actually fits within your budget. If it doesn't, let them know your budget, and then you're going to be able to know that with your loan officer.
Absolutely.
If you get pre-approved first, you'll know your exact budget, and then you can go shopping for that type of home, and then see if it's where you want to be.
Well, let me ask you this, because I have a lot of people that ask me all the time, well, I can just get a fixer-upper. Okay, so what does a lender accept as a fixer-upper? Because it used to be a fixer-upper was you just went in, you put on a fresh coat of paint, you changed out the flooring, but now it's a little different.
Yeah.
A fixer-upper is almost like a gutter, so.
Yes. So most of the loan programs that you'll take advantage of, you can't do like a total gutter usually. You'll have to have maybe new floors or paint and stuff like that. You might be able to do like a FHA 203.
Do you guys still offer those?
We do, yes.
Wonderful.
Yes,
Wonderful.
yep. So, which allows you to get a second loan for the renovations.
Absolutely.
Yes, so that's new windows, new flooring, new whatever else you need to do with it. Okay. And so that way you can move in, get a first loan for the original price, and then the loan for the renovation cost.
Okay.
20, 30, 40, 50 grand, whatever it might be, right? And you get approved on that. So that's something you can do and look into, and we do offer that here.
Awesome.
Yeah.
Good information to know. Okay, I'm sorry, I kind of jumped in, so you're more than welcome to finish sharing your information.
No problem, yeah. So I did have another graph as well, really quick, just for like today and a year out from now. So like I already mentioned, the average cost for a home right now is about $323,000. Of course, there's up and down. There's going to be a range there, right? But if you were to wait, now this year was crazy for a price appreciation, 17%. But for the calculation I did 8%. Okay. Maybe we're going to have a little bit slower time coming up possibly.
Okay.
So, or 8%. So if you do purchase today, or if maybe you decide not to purchase today, right? You decide, hey, I'm going to try to wait. I'm going to try to see if I can get this best deal I can, right? And that's what a lot of people's thoughts are.
That's what they think.
And so, but if you were to wait 1 year from today, instead of purchasing today, you might miss out on $25,864 in appreciation.
Wow.
Yeah. And the reason that's important is because you actually can use your appreciation not just sitting on in your house. You could do a cash out refinance later on down the road, right? And that could help with a lot of other things, debt consolidation, send your kids to school, get a new car, whatever it is. Maybe fund that. Or home improvements, right? Or fund that vacation you want to go on.
Absolutely.
So whatever you want to do with that money. But here we have a 5.275% rate today. That was just a rate I did today online with our lenders. And this is on a conventional loan of a 680 credit score.
Okay.
Which is pretty normal and average.
Normal.
Yes. South Carolina's credit score is about 636 for the average, though.
Really?
Yes, I looked it up. So, but the nice thing, if you can think about it, and remember, before you go shopping for a loan too, and I forgot to bring this up at when you asked me that question, get your credit scores up as high as you can. Because if you're going to say you come to a lender with a 620 credit score versus 680 credit score, it can be a half a point different. So a half a percentage different in your what you're offered. And that can be quite a bit of money difference. And also, too, your private mortgage insurance can go up a lot. So it could be about $200 on a 620 credit score versus 680. It could be about $65.
Wow.
Yeah.
I didn't even know that that was based off your credit score. I thought it was pretty much a blanket price depending on the price point of the home.
It's not, no. It's actually, yeah, it can be, it's based off your credit score too.
Isn't that
Yeah, it's the house and credit score. Yeah, so, but yes, the credit score does matter. A lot of people think, well, I'm going to get a credit score. I'm approved at 620 because I'm approved for this program, and that's all they think about. But they haven't, most people don't think about, what if I had this credit score? What's the difference? And so really pay attention to your credit score. And if you get that up, the higher you get it up before you go shopping, you're going to save a lot of money.
Absolutely.
Yeah. So just continue on here with this chart here. So with the payment, so this is a big thing. And I forgot to mention this too when I was for my own house. My payments 6 months later would have been $550 difference. More.
Oh, wow.
Yes. So
That's a car payment.
That is a car payment, yes. Or student loan payment, or whatever type of payment you have.
Yeah, wow.
Right? So now with this example here, we have a monthly payment of today, which is $1,980, okay, today's value. But if you were to wait a whole year, you might have to pay $2,350 a month, which is $370 difference. So it's quite a big difference. And that's what we already talked about, debt to income ratio. That's what can push you off the edge.
Right.
It's like, okay, now there's $370 more on income, unless you can then boost your income up somehow, a second job or whatever it might be, Uber, DoorDash, something like that.
Whatever works.
Right? Whatever it is, then you might be able to qualify still. But typically you have to have that type of income for almost 2 years to qualify. And most people, if you're just trying to qualify within a couple months of trying to purchase, we can't use that income.
Right. Okay.
Yeah, it has to be there established. And go ahead.
Oh, I'm sorry. I was just going to say, so what would you suggest, or what type of information do you need for those who own their own businesses? They're not working for a company where they are getting taking taxes out. They're getting they're actually paying their own taxes as their own business owner. So do you have programs for that, and what would you share with them?
Definitely, yeah. So self-employed people, great, awesome people. We have a lot of people who are in the real estate business, right? Yes, including myself. We're all self-employed. And so there's tons of that's what America's built on, the energy and the people that want to take risks. And that's what self-employed people do. They take risks and go out there and build something and offer services. And so definitely appreciate that risk that you take. And when you do that, you actually do have options. And so there's a few options where we call it bank statement loans. Okay. So what you'll do, instead of sending all your income, what you've made, and he says, as self-employed people, we want to pay as less taxes as possible. And everyone does, of course. But as self-employed, you actually can work with your CPA, and you can write off a lot of things, or whatever it might be for you. And what that does with the IRS, it makes it look like you don't make much at all. So you might make $150,000, but when you do your taxes, it says you made $40,000 or $50,000, whatever it might be, right? And so you're just not going to be able to afford to purchase the home you want because your debt to income ratio is off. Right. And so what you can do, though, instead of offering all your tax information from the last 2 years, you're going to just give us 12 to 24 months worth of your bank statements. We're going to calculate how much money you've inputted into, deposited into your bank, and we'll use that as your calculation instead of using the W-2s and things like that.
Great information.
Yeah.
Great information. Well, as we're wrapping up, I just want to share with each of our viewers again, we are here to help navigate you through the process of real estate. We want to encourage you that all hope is not lost. You do have an opportunity to be a part of the American dream of home ownership. We are here to help you in any way that we can. And if you don't mind, Joseph, if you'll just share your information with our viewers so that they can get in contact with you if they need your services.
Yes, for sure. So Joseph Barker is my name, and I'm at Best Life Mortgage. We're here in Greenville, South Carolina. We love the place, and we love the people we serve and we work with here. And yeah, if you need to get a hold of me, 704-900-4522. Text or call me anytime. Or if you want to email me, it's joseph@bestlifemortgage.com. Thank you so much.
Wonderful. And I am Terica Talbert with Century 21 Black Oil and Company. You can reach me at 864-270-8111. Now, because you are my YouTube followers, I need you to like, comment, and share. Prescribe to the YouTube video so that we can continue going forward. And I want to be able to interact with you guys just for you to let me know, what are you thinking? How do you like the information we're putting out? And how can we better serve you as the community? Thank you so much for watching. Until next time, enjoy your day.